All right, so chapter 2, part 2 of 3 lecture notes. Hopefully you've got those handy and you're not just watching these. I suggest, and I haven't said this in several videos in, and I'm making this announcement. I need to make sure I write it down and announce it in the blackboard, but I print these if you can. If you can't understand, I certainly don't like to print more than I have to because each sheet costs money and the ink goes on it costs money, and sometimes, I don't know about y'all, but our printer's just not acting right. So sometimes it's like we don't even have a printer at the house. With that said, if you can, do. I think it'd be better. That way you can take notes with me. But either way, take notes at a minimum. Take notes. Blank sheet of paper, separate tablet. Whatever you got, make it work. All right. So quick review. I still encourage you to make sure you can do these. We've done these already several times, different versions. I'm not going to add any more comments. Please watch the first video I did in chapter 2. It'll cover this. I think it's very important to be able to identify, especially for your test. And I am the one that created the test, to identify what if they count as an asset, liability, equity, revenue, or expense, and then what the normal balance is. I don't think, really, it's going to make your class time in this course very difficult if you can't do this. So be ready, get good at it, keep plugging away at it, you'll get it. Like my friends say, if I can do it, anybody can. I need new friends. All right, so let's get into some journal entries here. This is, if you said all of a sudden he sounds like he's more excited. He had to memorize this stuff's fun. I like talking about accounting, but this is what we're here to do, is this kind of stuff. All right, so record the following transactions for speedy computer. Don't worry about the date. When I was a student, the date would drive me bonkers. It'd be like 3 years older. I'm like, something wrong. And, sometimes they do this. And I think I might redo these handouts to reflect that, so then they're timeless, right? It could be any year, but I don't care about the year. We're doing accounting in before I was born, and they'll be doing it after we're all gone. I mean, accounting's just this. There is no substitute for this. Okay, so the year will carry on and continue on as it always has. And I think accounting's been around, I think you can safely say, since the end of, or the beginning of the Renaissance. So a long time. What would that be? 400 something years now? All right, so March 1, because it's like in here with this and it starts there, I overlook that one sometimes. Probably got to clean that up. Yeah, that looks a little better. Maybe even like that. No. Wasting time, guys. Sorry. All right. So Speedy Computer Service received $3,000 cash from Bill Smith in exchange for common stock. Then we got another one on the 15th, 16th, and we're going to do the journal entries, and we're going to prepare a trial balance, we're going to do an income statement, we're going to do a statement of retained earnings, then we're going to do a balance sheet again, and then we're going to talk about why the cash balance does not agree with net income. We got a lot to do. Might not be able to do it all in one video. Let's see how it goes, okay? So this is the other reason for having a printout in front of you. Then you could have all this. And you'll see how difficult it is in this video. So we'll be switching back and forth. So March 1st, the company received $3,000 from cash from Bill Smith in exchange for common stock. So that's owner's investment. Debit was, cash was received. So that's an increase in an asset. The normal balance for an asset account is a debit. The normal balance for investment, an increase in cash, not a dividend, but an increase in cash is a credit. In common stock. An increase in common stock is a credit. So that's why the journal entry will look the way it does. On March 1st, we'll debit cash for $3. Wow. Let's get this corrected. Oh, boy. I have no idea what that was kind of crazy. I fixed that sort of. Anyway, so we debit cash $3,000 and we credit common stock $3,000. All right, that could be on your test. Be prepared. On March 15th, provided services and received cash amounting to $5,400 from customers. Provide services. That is revenue. What kind of revenue is it? Based on this scenario, this transaction that we're given to work on is services revenue. and they receive cash. That's a debit to revenue. And to increase revenue, the normal balance for revenue, all revenue, doesn't matter what's in front of the word revenue, all revenue, service revenue in the example, is the normal balance with a credit. So, debit cash, $5,400, and then service fees earned is fine. You could call it, and I would be fine with this. So whatever you like, I'm good with it, okay? I'm okay with either one. All right, on the 16th, purchase supplies only account about $100. So we got supplies, which is an asset, $100, and we owe money, which is a liability. So to increase liability, we credit. To increase assets, we debit. So it should be debit supplies 100, credit accounts payable 100. Next, paying salaries. We got to pay people. We got to have employees. So we're going to pay them. Paid salaries, $5,000. So we debit expense, salaries and wages expense. That could be an account that we could use. Wages expense, salaries expense. And then we credit cash because we're reducing an asset account. And when we reduce an asset account, it's the opposite of the normal balance, which is a credit. So I think I skipped the 17th. We'll go back and grab it in a second. So salaries expense, $5,000. Credit cash, $5,000. And gas and oil expense, it's obvious the gas and oil expense and salaries expense are the same, right? Debit expense, credit cash. So in this case, gas and oil expense was $800 and they paid it. So let's look at it. $1,700 paid for gas and oil, $800. So you debit gas and oil expense, $800, and you credit cash, $800. Just like we showed, and you can back up if you need to. All right, so provided service on credit, $600. Remember, in the first video that we did in this course, we can record revenue even though we don't have cash. That is okay. That's GAAP says that's fine. GAAP with 2 A's, generally accepted accounting principles. That is fine. So we can earn revenue on credit. Now, when somebody owes us money, when another company owes us money, that's called account receivable, and that is an asset. And when we earn revenue, we increase the revenue account with a credit because that's the normal balance for revenue. So on the 21st, we'll debit accounts receivable, $600, and we'll debit service. I just said that backwards, didn't I? Debit accounts receivable, $600. Credit service fees earned, $600. 2 more to go, or 3 more to go rather. Provide services and receive cash amounting to $6,000. We've already done one like that on the 15th. So I'm going to combine the 28th and the 29th, and we're going to look at both of those together. Pay for truck and equipment rental. Treat that as an expense, and then you'll be fine in recording the journal entries. So 28 and 29, we'll look at those together. So on the 28th, they earned and got paid for services. So debit cash, $6,000. Credit service fees earned, $6,000. So now on your test, right? On your test, it will be multiple choice often. Some guidance will be given on the account, so don't worry about the account names. Take that off your worries. It'll be very obvious. I won't have like service fees earned or services revenue. You have to pick which one's right. It'll be glaringly obvious. Hey, this is service revenue, service fees earned. It won't be ambiguous. That's not something. I just want to know if you know how to do these journal entries. You'll go to work, let's say you're in accounting. Or not, you're at a company, right? They're going to have a predetermined list of account names, and that's the only ones you can use. So we're going to have that similar approach on our tests. You know, it'll be pretty well prescribed. You just got to know which one to use, and it'll be obvious. Real world, yeah, they can do some training. If you still have any doubts from time to time, things happen. There's people to talk to and ask, your teammates. Everybody wants you to do a good job. So cash and service fees earned was 1, and then again the rental for $2,500. Equipment rental expense, $2,500, and we credit cash because we paid for it, $2,500. And lastly, I don't know if we need to look at the journal entry, but we will. The transaction is given in the problem, but we will look at the journal entry first and then that transaction. Dividends are paid out for $2,000, and we credit cash. So dividends $2,000, credit cash for $2,000. And how that was worded, pay $2,000 cash dividends, and that does matter. There's different kinds of dividends, not always cash. All right, so they paid a $2,000 cash dividend, which I love. That's pretty good. Your stock's going up in value, and then they're paying you a dividend. I love dividend paying stocks. All right, so then we're going to have to get into this, and this might be all we can get done before my self-imposed deadline of 15 minutes comes up. All right, so we've got to get a trial balance, and a trial balance is the total of all the debits equal the total of all the credits. Okay. Now we want to go for our assets section. That's our assets. I'm just going to go in order of the color here, and that's our liability, and then this is our equity. So if you can see in here, this is like a balance sheet, right? Assets, liability, liability there, and then equity. And then if you look at this section right here, I'm just going to color it one color. If you look at that, that's your revenue statement. So revenue earned minus expenses. It's pretty cool, huh? Most liquid, less liquid, and even least amount of liquidity. So cash is liquid, right? We're ready to spend. It's already in its liquid form, cash. Accounts receivable wouldn't take much. People are going to be paying very soon on those accounts, so it'll be turned into cash very soon. So it's close to being liquid already. Supplies can take a little longer to sell and liquidate if you wanted to. It's kind of hard to sell supplies. It's only $100, but anyway, that's the theory. That's how we list those. So let's get to going on this. I'm looking at the clock, and the clock is not on my time. I got 2 minutes. Let's see if we can do cash real fast. So we got $3,000 in cash increase. It'd be easier if we had a T account. I had T accounts. I tell you what, I'm going to call the video here, and then I'm going to come back in the second video with a way of determining what the account balance is as we work on these. I'll do a few with you, and I think I'll let y'all do the rest on your own. But anyway, so I'm going to call the video here. Stay tuned for part 2 for the part 2 in chapter 2.